Charting man Dan McDermott from thechartguys.com joins me now. Hey Dan, how are you doing?
Good, James. How you doing?
I am feeling good despite the fact that my voice is hoarse thanks to my transatlantic flu that I caught on the flight back from London on Friday last week. But that's not what we're here to talk about. I want to talk about what's happening to our markets. The S&P to me is starting to look like a spastic bipolar entity that has lost its meds. The price of gold is trading in this tight range that is like irresolute from a objective standpoint. It looks fully controlled from a non-objective standpoint. I feel a little bit more comfortable saying that now that 3 traders from JP Morgan were actually charged by the Department of Justice for rigging gold, even though they're trying to downplay it as, oh, they were only spoofing some trades. It's like, yeah, I'm sure there's more to it than that. Whatever. There's the indicators in the major markets are not telling me anything except that something doesn't quite seem right. What's your take on all of that?
Well, there's definitely a lot of overhanging, fundamental, bearish headlines out there that we keep seeing. And it's very important to be aware of, but those that follow me know that all I care about is price action. So the S&P 500 is on the verge of all-time highs and just hovering right there for the last few days. The reaction to the Fed didn't get a bearish reaction. So for me, it always boils down to, if I'm a trader and what I care about is making money in this market, I care about the price. The price is the only thing that matters to me. And if the price is holding up and in an uptrend, I'm bullish. And if it's in a downtrend, I'm bearish. So the price right now is in an uptrend, and you better believe that I have a plan where if the you-know-what hits the fan, I'm going to do X, Y, and Z. But until that happens, I'm going to stick with the trend.
All right. Can you tell us what you're going to do if the proverbial Midas hits the fan?
I'm actually going to make a video this weekend talking about different scenarios as far as the degrees of how bad it gets. If it's a 2008 event, if it's a worse than 2008 event, if it's a winter of 2018 event. Those are very different degrees that would have different plans that were enacted. But one thing that I do feel more comfortable having is capital allocated for cryptocurrency, because I do believe that if things do really get ugly, I do think Bitcoin will be a bit of a safe haven in that regard. So I'm more comfortable with my exposure to the US dollar, having that as a bit of a stop loss, so to speak.
Okay, so there's something that we haven't really covered much of. You trade a lot in cryptocurrencies, even though we haven't covered it, and crypto seems to be slowly but surely worming its way back into the popular imagination among investors as the price improves. What are the fundamentals driving the crypto prices now? What does that landscape look like since the last wave? The last thing I remember, there was 5 that mattered and the rest didn't.
Yeah, there's definitely a certain number that have my attention, and the rest is just noise for me. It doesn't mean they're not going to go up and down in very significant ways, but just to stay focused, I like to keep my eye on maybe three main coins, which is Bitcoin, Ethereum, and Litecoin. I'm conveniently wearing my Ethereum sweatshirt, but it's something that is going to be, honestly, it's been emotional cycles that have dictated everything since the all-time high. We had the euphoria, we had the fear where we hit the bottom, then we saw a significant recovery where we made our way back to where we stand right now. And we're at a point where it wouldn't take too much significant price action or dollar volume to see the price get back up into the mid 10,000, 15,000 range. And then next thing you know, we're going to be talking about all-time highs again. And if we get all-time highs again, then the euphoria is going to kick back in again. So as far as fundamental things that have occurred, there's further development on the platforms. There's a lot of developers working on Ethereum. We have the halvening in Litecoin and the upcoming halvening in Bitcoin, which limits supply, which is always a good thing for price if supply gets limited. But aside from those things, I'm just watching the price and noting the relative strength that we've seen over the last 4 or 5 months, and knowing that a lot of people will get interested again if that price does shoot up. And I do believe that a catalyst to see that price shoot up could be if we do see some bigger fears in the geopolitical or geoeconomical landscape.
Okay, so then in terms of an alternative safe haven, which I guess is the way to think of Bitcoin from my perspective anyways, is the appetite, is the audience for cryptocurrencies predominantly a different generation still, or are there more sort of dinosaurs like me gravitating towards it because gold is, sort of the more cynical among us decide that gold is a manipulated asset class, and cryptocurrency is younger and therefore less susceptible to that kind of influence?
Well, I won't go that far. To me, I just accept a broad stroke that if there is significant money involved, it's manipulated, whatever it is. So the market's manipulated to me, gold's manipulated, crypto's manipulated. It's all manipulated. All I'm trying to do is follow the whales and pick up my little scraps and my little pieces of the pie. So I certainly will not go as far to say that crypto is not manipulated, because I think it can be fairly easily manipulated without a significant amount of capital to move things around. But it is definitely generational, with the younger generation more on board and technologically savvy. And I understand that. I mean, even me reading about the fundamentals, so much of it is over my head. And if it's over my head, it's going to be over a lot of people's heads. So I think that the driving force to get it adopted as a safe haven would be necessity. And it would be the dollar dumping, and it would be the market dumping, and everybody saying, okay, where do we go? And if Bitcoin's hitting all-time highs when that's happening, that's going to sell itself, so to speak, as far as getting people interested in it.
Right. Okay. And so, I mean, what is the motivation for buying Bitcoin for people who aren't traders right now? I mean, so it's the millennials gold, we call it. Because all the arguments for crypto, to own crypto, are the same as you would use for owning gold, except in the case of gold, they're actually true, whereas in crypto, they're wishful thinking. At least that's my argument, and I'm sure I'm going to get lots of flack for that. But why do people buy Bitcoin then? Is it just to speculate, or is it like more of a heartfelt, dyed-in-the-wool essential belief that the US dollar is less trustworthy and gold is less trustworthy than crypto?
Well, it has a cult following to a certain degree, just like Tesla or any of these, major stocks. But the reason behind the cult following for Bitcoin is just people looking at the government and the financial system and calling BS and saying, I'm not going to buy into this system. My dad, as an example, and the baby boomer generation have been told, and it has worked, put your money in the market, any money that you have, and in the future, it's just going to consistently go up. And that has been the case. But we saw 2008 happen. We know that there were a ton of shenanigans. We know that not much was fixed. And we know that there is the potential for something along those lines to happen again. And that, of course, is what birthed Bitcoin. So there are people that are using it as a diversification tool, whether it's, 2% of their total assets are being allocated to cryptocurrency as a way for diversification. But honestly, it's a lot of people that just believe in monetary freedom, and they certainly do not see that in the way that the monetary system is currently being governed. You
bet. All right, Dan, let's talk a bit about cannabis now, because that's what most of my audience wants to hear about. Yeah. We saw a sell-off in canopy growth. The market generally is characterized by weakness and a downward trend. Is that consistent with what you're doing in the cannabis space?
Absolutely. I mean, we had a scenario where Canopy was holding on fairly well comparative to peers. Peers were weak all this week. Canopy held on well until yesterday, and then very quickly, we're now down, 11-12% from its recent high. So it's almost like Canopy caught up with everybody else all at once. We still have ACB, which has not found a bottom from its bearish earning reaction. And that is continuing to drop down, and it keeps getting downgrades, and that's not helping, of course. And even in the USMJ space, we're seeing a lot of names give back some of the decent moves that we saw. We saw 20-30% bounces, but we're fading back down towards those lows where those bounces came from. So it is lacking catalyst, and that's what Bruce said. You were talking to him yesterday. And a lack of catalyst, and that's definitely it to a large degree. I think if we can see some banking movement, if we can see the SAFE Act get a vote in Congress, get some headlines, have a chance in the Senate, I think that will be a short-term catalyst. But honestly, I don't have very high hopes for Canadian MJ that we're going to see some kind of fall run unless we have a U.S. sparked run and the names in Canada that have some U.S. exposure would benefit from that as well.
Uh-huh. Okay. All right. So what's your outlook generally on what do you expect to be happening in the week ahead?
Well, we need to see some oversold bounces. I traded CGC a little bit this morning just for small gains as a bull, just looking for that oversold bounce to get going. It's a very weak bounce at this point. But other than that, it's just patiently waiting. Bears are making a lot of money. So if you're comfortable shorting or if you're buying puts, certainly a lot of downside action to profit from. But other than that, we're just going to be, honestly, for me, it's safe act or bust as far as the rest of 2019 goes.
Huh. All right, Dan. Let's take a look at some of your charts now.
So we'll start it off with the S&P 500, and we certainly have a double top at the all-time high right now, so bears at least have something to be talking about. So 3028 is that all-time high. We've gotten up to 3021, 3022, haven't broken that level. So from here, if we drop down and break the low of the FOMC reaction, which was down at 2978, if that level breaks, that'll be notable. It'll be definitely a clear short-term shift in momentum from bulls to bears. Recently, it's been weakness in the tech sector, and the financial sector has been holding on really well, which has helped the S&P 500 bulls remain strong. But those are pretty much the two levels that we're going to be watching in the short term. If we see a bear break of that level, we zoom out to the weekly chart, and we then look at the dump of the lows of the August dump down at 28.22, and that becomes the most important support level to try and maintain the weekly uptrend. So there will be talk of double top in the markets, and that is a valid concern, but we need to see some more information next week to see if the bulls have the ability to power through that resistance or to see if we break the FOMC reaction low. Looking at Bitcoin, the weekly time frame is getting very interesting, and I'm very confident saying that cryptocurrencies and Bitcoin in general will see a volatility spike to start October. And we have our high, this is your standard equilibrium pattern, the high of 2019, low of consolidation, lower high, higher low, lower high, and we've pretty much been trading within a very tight range as far as Bitcoin is concerned over the last 5 weeks. So we're either going to see a bull break and look up to the 2019 highs, or we are going to see a bear break, and from there, we will zoom out to the monthly time frame, and monthly consolidation will then be underway. We've seen this big bull move in 2019, and if that range breaks bearish, we then look for a monthly higher low to form, but obviously that will deflate the momentum that the bulls have had in the year so far. So keep an eye on that weekly time frame for Bitcoin because a break is imminent. We get tight to a certain point, and the volume continues to drop off, and then we see a volume spike and a break of that range and some short-term direction. As far as the MJ space goes, what I'm watching for ACB, since the reaction to earnings, which has obviously been bearish, is very similar to CGC. CGC had the bearish earnings reaction, then we saw downgrade after downgrade, and bearish articles putting continued pressure on it until we finally hit a bottom. And then we reached a inflection point where the selling pressure had subsided. Everybody that was going to short had already been short. Everybody that was going to sell had already sold. And then we saw a 25% plus bounce. So keeping an eye on ACB for the same thing. What was the signal in CGC? We hit our low, we had a weak bounce attempt, we held the low, and then we saw continuation. So it was a little bit of a hold of support and a move to the upside that indicated the bottom, and right now ACB is still hitting lower lows every day, so there's no sign of that happening in the short term, but it is something that we are keeping an eye on because when that bottom is hit on ACB, it should be a very easy 5 to 10% bounce just to look for a daily lower high. But again, it's that tilting of the scales where everybody that's going to sell has already sold, and we then see some buying pressure take over.
All right, Dan, thanks again for joining me. As usual, it's been a real education. And how do people join your educational program again?
Chartguys.com and check it out. And we got plenty of free content to see if you're interested in joining the chat room. And we look forward to hearing from you.
You bet. Thanks, Dan. We'll see you soon.
Thanks again.